Hello, it's Tuesday the 18th. I'm FxPlew and this is the market brief. Now we've got unemployment data due out today in the UK. Forecasts expect another fall in the claimant count, while the unemployment rate should remain unchanged at 3.7%. And linked to this, do you remember how the IMF made a pretty gloomy prediction for the UK economy to be the worst performing in the G20 this year? Well, some analysts think the UK is now set for a pretty strong rebound in the second half of the year. We are seeing more forecasts suggesting that the UK will avoid a recession, while the US and the Eurozone are heading towards negative growth. So have some of that, IMF. If that does prove to be the case, then some credit needs to go to the Bank of England for their little and often approach to the rate tightening cycle. Don't forget, they led the charge with the first rate hike way back in December 2021, and the US followed shortly afterwards. Now, as you know, I'm far too woke to be brandishing stereotypes about the classic brash American approach or anything like that, but the Fed did rather wade in with all their jumbo 75 basis point rate hikes to get the job done on inflation. And there is a growing concern that they might have overcooked that omelette now. So, if the brash American cap fits. To be fair, they did have a small and unexpected matter of a banking crisis to deal with along the way. But the markets are in a bit of a quandary over monetary policy, and there is a bit of a gap between interest rate expectation and the relative strength of the US economy. And all this was compounded by a recent report prepared for the last Fed meeting, which predicted the collapse of those regional banks would spill over to the wider economy and wider banking activities. Whilst the Treasury has been very keen to show its confidence by praising all the good work that has been done since the financial crisis, this report rather called into question the robustness of the wider US recovery. So many are rolling out that classic cliche of the next Fed meeting is the most important, but the Fed are treading a pretty fine line at the moment. While we may see one final 25 basis point rate hike, they may just as easily confirm a pause to rate hikes. But while inflation is still way above target, only time will tell if they've done enough. The dollar has recovered pretty well from its recent correction. The dollar index rose to 102.25 yesterday. That's as sterling lost a little ground, slipping to 123.55 against the dollar. We open around 124.05 against the dollar. We're about 113.40 against the euro, and euro dollar is around 109.40 on the open this morning. Right, that's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.